So today we'll discuss about disposal of non-current assets. What are non-current assets? What are non-current assets? We discuss these things.
Long-term assets, but the business keeps.
For example,
furniture, machineries.
So this is what we are discussing. Okay. So under depreciation, this is part of your depreciation topic. Okay, disposal of non-current assets. So last week we discussed about how to account for depreciation. Okay, so today we will discuss about disposal of non-current assets. So to explain this, I will take an example. Okay, so let's say the motor vehicle cost is 12,000 pounds and the useful life is 4 years. We had a scrap value of 2,000, and this motor vehicle was purchased on 1st January 2016. So these are the information. Okay, so let's say you have purchased a motor vehicle, business has purchased a motor vehicle on 1st January 2016 for 12,000. There is a scrap value of 2,000 and the useful life of the asset is 4 years. Okay, and the depreciation method is straight line method. Okay, so on 1st January 2018, this motor vehicle was sold for 7,500. You understand? So you purchased on 1st January. Okay, so if you take the period on this date, 1st January 2016, you purchased for how much? 12,000. How many years you can use this?
For 4 years.
4 years. Okay, 1, 2, 3, 4. 4 years. So this is 2016. This is 2017, 2018, 2019. 4 years you can use this particular motor vehicle. However, after using the motor vehicle for 2 years, so what is the decision the business has taken? On 1st January, on this particular date, the beginning of 2018. So what is the decision the business has made? To sell the asset. For how much? 7,500. On this particular date, they sold the asset for 7,500. You understand? So in order to record this particular transaction, there are two things, two parts. First part is you have to record the purchasers of motor vehicle, and for these 2 years you have to record what? Depreciation. You understand? Okay, so this depreciation part we discuss. So what is the method we have to use? Straight line method. What is straight line method?
That means you find the depreciation charge and you apply it for all the years.
All the years, the equal amounts.
Yeah, equal.
Okay. So unlike a reducing balance method, so where we provide depreciation based on the reduced balance, whereas here we have to provide a fixed installment, fixed amount every year. Okay. So you need to provide for how many years? Depreciation.
4 years.
4 years, provided you use the asset for the entire year. entire period. You understand? But however, in this case, you will have to record depreciation for how many years? 2 years. So 2018, beginning of 2018, you are selling, you are disposing the asset. So there is no more asset in your company or your business. So therefore you can't show in your books of accounts under non-current assets the motor vehicle. It's not available now. You sold it. So therefore we need to completely remove it from your books of accounts. You need to delete it from your books of accounts. So delete it means you don't erase it, you know. You have to pass an entry to record the asset account to 0. You have to make the asset account to 0. Okay. So there are certain steps for this disposal. This is the sales proceeds. Sales proceeds means when you sell, the company will receive money. Okay. So this has to be recorded. So how you will account for this? Okay. So there are two parts as I explained you. First part is recording of depreciation. So you record the asset and provide the depreciation. The second part is we'll discuss about the disposal part. It's very easy. It's not difficult. Okay. So what is first part? We have to record the depreciation based on straight line method. So can you calculate the depreciation amount? There is a formula we discuss. What is the formula? You take the cost, you remove the scrap value and divide by the number of years. So please calculate the depreciation. Then we will account. So depreciation calculation is cost less scrap value, the useful life of the asset. Cost is 12,000, scrap value is 2,000, useful life is 4 years. So thereby 10,000 divided by 4. How much is that?
2,500.
2,500. Okay. So what you will do under straight line method, your cost is 12,000. Okay. So first year depreciation 2,500. Okay. So how much is that? 10, 5, 11, 2, 9,500. Second year depreciation is how much? 2,500. 7,000.
Yeah.
Third year depreciation how much? 2,500. Okay. So fixed amount we are providing. You understand? 500. So 4,500. Fourth year depreciation 2,500. So this is what we discussed. So finally you are left with the scrap value, no?
Yeah.
You can sell it after 4 years. You can sell it for 2,000. So that is called scrap value. So this is what we discuss. Okay. Now we'll open the what do you call, the necessary accounting entries we have to record in the books of accounts. So what accounts you have to open? First of all, the purchasers of fixed asset. Okay. Motor vehicle. So you need to have a motor vehicle account. Open up motor vehicle account. Then you need
Depreciation
expense account, because you need to record the depreciation. Depreciation expense account. What else you need?
Provision
Yeah.
for depreciation.
Provision for depreciation account. Provision for depreciation account. Okay. So debit, credit, So debit side, credit side, debit side, credit side. Okay, so first of all you record the purchases. When you purchase the asset, you credit your bank account and debit your asset account. So first Jan 2016, the bank account credited and you debit your motor vehicle account 12,000. So motor vehicle account is the asset account. 1st January 2016 you purchased. Is that clear? Okay. Now end of 2016, so you need to record the depreciation. You need to close the books of accounts for 2016. So every year we need to prepare financial statements. Okay, to prepare financial statement you need to provide depreciation and you need to charge it to the income statement. Okay, so how much is the depreciation amount? We calculated 2,500 per annum.
Yes.
2,500 per annum. Okay, so what is the double entry that we need to record? So since this depreciation is treated as an expense, so expense account has to be debited and you need to credit the provision for depreciation account. Okay, so on 31st December 2016, end of the year, okay, you provide 2,500 debit, provision for depreciation. Provision for depreciation account will be credited 31st December 2016, depreciation 2,500. 2,500. What is this entry?
I forgot, I was looking.
Remember, okay. So depreciation account, expense account debit,
Yeah.
and credit the provision for depreciation account. Okay. So 31st December you need to close the books. So how you will close it? So you need to balance this, no?
Yeah.
So 2,500, 2,500. Depreciation expense account will be transferred to the income statement. Okay, so income statement will be debited and this account will be credited to calculate the profit. You understand? So this is 31st December 2016 income statement. 2,500. So I am not going to show you the income statement. So income statement will be debited. Okay, separate account. So there you will have the sales, expenses, okay, then you will calculate the profit. Under expenses you will have the depreciation also along with salaries, electricity, telephone expenses. The depreciation also will be part of your income statement under expenses. Then so sales minus expenses will be your what? Profit or loss. So something like this. This is income statement. Okay, so what you will do, you credited depreciation expenses, you are transferring basically to the income statement. So under expenses, this side is your expenses in the income statement. So there you will debit 2,500. So you will have salaries 10,000, electricity, you understand?
Yeah.
5,000. This side you will have the sales account. Let's say 25,000. Then if you balance it, you will get the profit. Okay, so basically depreciation expense account we are transferring to the income statement. Is that clear? Okay, this account we closed. Then there are two accounts. What is that? Provision for depreciation. So where you will show this, these two accounts? In the balance sheet. The balance sheet, because the balance sheet will show your assets, liabilities and equities. You understand the financial position of your company. So this will be carried forward to the next financial year. Okay, so motor vehicle 31st December 2016 balance carried forward 12,000. just balance this account 12,000. Then there will be an opening balance, no? 2017 balance brought down, no?
Yeah.
12,000. 1st January 2017. Okay, so we are carrying forward the asset account. So likewise the provision account also, you take 31st December 2016 balance carried forward 2,500. First January 2017 balance brought down how much? 2,500. Is that clear?
Yes.
Okay, so as long as your asset is there in the business, every year, you understand, you need to show these balances in the balance sheet. So 2017 also, you have the asset, the books of accounts also will reflect the balance, and also the respective depreciation charged up to that point. Is that clear?
Yes.
Okay. Now the first year we completed now. We recorded the depreciation and we transferred the depreciation to the income statement. Then we have balanced our asset and the provision account. Okay. So can you record the transaction for 2017? So 2017, what you have to do? Again, you need to record the depreciation. So how much is the depreciation? Straight line method. The same amount will be charged. Okay. So depreciation account debit, provision for depreciation account credit. Okay. Same thing. So this will be as at 31st December 2017. Provision for depreciation account 2,500. Depreciation account debit, credit. Provision for depreciation account 31st December 2017. Depreciation 2,500. Is that clear? Okay. This is only entry. Then what you need to do? You need to close the books. Okay. So depreciation expenses where you will transfer?
To income statement.
Income statement to calculate the profit or loss for
The business.
profit or loss for the period of 2017. Okay. So 31st December 2017 income statement 2,500. So thereby this account will be balanced. Then the asset account, you did not sell the asset, so you need to carry it forward your asset. As long as your asset is in the business, you have to carry forward to the next financial. So you had the balance. So 31st December 2017 balance carried forward how much? Same thing, 12,000. So balance this account. Then the next financial year 2018 balance brought down 12,000. Okay. So then the provision account, as long as you have the asset. See, now second year also your cost is how much? We are showing 12,000, but is this the real cost? No. Why? We have provided 5,000 now. Okay, if you want to see the real cost, 12,000 minus 5,000, which will be the 7,000, the book value, net book value. Okay, but the real cost is, actual cost, initial cost was 12,000. We are just carrying forward. Along with that, the depreciation part also we are recording. If you want to, at a given point of time, if you want to see what is the value of the real value of the asset, what you should do? You should compare the cost along with the depreciation provided in the provision account. So therefore this account also you have to carry forward to 2018. So how much is that? 5,000, no? So far we have depreciated this asset 5,000. So 31st December 2017, balance carried forward 5,000. On 1st January 2018, balance brought down 5,000. Is that clear? So we recorded 2016 and 2017. So 2016, 17. Okay. So we brought down the balances for 2018. So asset account and the depreciation, provision for depreciation. Now what has happened in 2018? For 4 years you need to continue this process. Again 2018 you need to provide depreciation and provision for depreciation. You need to continue this process for 4 years. However, what has happened? The business has sold on 1st January, the beginning of 2018. The motor vehicle was sold for how much? 7,500. Okay, so therefore you can't continue the depreciation because you need to remove the asset from the books of accounts. You need to make this account zero. You understand? So there is no more asset on this particular date. You sold the asset. You got it? Okay. So how you will record that? There are certain steps. Okay. First of all, we need to make this motor vehicle asset account zero. We need to remove this account. Okay. We need to make this account zero. In order to do that, what you have to do? You need to open an account called disposal of asset account. Is that clear? Okay. To make this account zero, what you do? There is a debit balance, no? To make it zero, what you should do? You need to credit.
Yeah.
Then this will become zero. Where do you, if you credit, where do you debit?
Disposal.
Disposal account. You need to open an account called disposal of motor vehicle account. Okay. So can you open a separate account? I will remove this part. I will erase this part. This is not relevant now, this account. Okay. So what you need to do? What you need to do? You need to make this account zero. In order to make zero, we have opened a separate account called motor vehicle disposal account. So how do you do that? You have to credit this account. Okay. On 1st January 2018, disposal account, motor vehicle disposal account 12,000. So thereby this account will be this part. I will erase this top part of the provision account. Okay. So you credit that, thereby you will make this account what?
Zero.
Zero. There is no balance in your motor vehicle account because there is no motor vehicle. Okay, you have sold. So once you credit here, you need to debit disposal account, motor vehicle account. How much? 12,000. So this is the first step. Remove or delete the asset account from the books. That we did. Remove or delete from the books of accounts, the motor vehicle account, asset account. And you have to create what? Disposal account. You need to create a disposal account. Then third step. Okay. So this disposal account, you brought the cost. Is this the real cost on 2018? No, it's not the real cost. What you should do? You have to bring the related, the depreciation. Okay? So far we have provided on this particular date. Then that will be a fair comparison, no? You understand? Okay. So what is the cumulative depreciation? Cumulative means the total, year by year total. How much is that?
5,000.
5,000. So you need to remove the provision for depreciation account as well. So once you remove the motor vehicle asset account from your books of accounts, you need to remove the provision account as well. Why to keep the provision account if you don't have the motor vehicle or the asset account? You understand? So what is the third step? You remove the provision for depreciation account and transfer this to the motor vehicle disposal account. Okay. Now here there is a credit balance. To make this zero, you need to debit this account and you have to credit disposal account. Okay. So 1st January 2018 disposal, motor vehicle disposal account 5,000. Disposal account will be credited on 1st January 2018. Provision for depreciation account 5,000. So thereby we have deleted or removed the asset account as well as the related provision account. Okay. Now what is this difference? 7,000. What is the 7,000? If you want to sell the asset on this particular date, okay, you can get it from in the market for 7,000. But how much the asset has been sold? How much is the sales? 7,500. You got it? So even though the book value shows 7,000, you could fetch 7,500. So when you sell the asset, you are giving your asset. What is the other asset you are receiving? When you sell?
Income?
Cash. You are receiving cash.
Okay.
Okay? So when you receive cash, where you will debit?
The cash account.
Cash account or the bank account. And where you will credit? The disposal account. It's an income, no?
Yeah, but you have
Yes.
sales.
Wait, I'll show you. I'll tell you. 7,500. Okay? So what is the fourth step? Record the sales proceed received. How much you have received?
500.
7,500. Okay? So when you receive cash, you will debit your cash book or the bank account. Okay? So 1st January 2018, motor vehicle disposal 7,500. Here 7,500.
Then sales, you don't have sales account?
Regular sales, no.
No.
This is you are selling motor vehicle.
So
Okay.
you
You don't create a sales account. Okay. So what you do is you debit your bank account. Since we have opened the motor vehicle account, you credit this.
Okay.
Okay. Now, how do you balance this account? Which side is more? Credit side. So credit side is 12,500. So you take the total and 500 is the difference. What is this difference?
That's the income.
Profit.
Yeah, profit.
This is the profit. So when you debit this account, it's a debit entry, no? Where you will credit. It's a profit, no? So profit goes to where? Income goes to where? To the income statement.
Yeah.
So I explain, you know, this is the income statement. Okay. Income statement, you will have your normal sales, no?
Yeah.
So you have normal sales 10,000. This side you have expenses. Okay. Because all the expenses are debited, all the incomes are credited. So under expenses you have salaries 5,000, electricity 1,000, then you have depreciation 5,000. Okay, you got it. Then this is the profit on disposal. Okay, so this will be your profit. This will be transferred to the income statement. So here you can say disposal profit on sale of motor vehicle 500. So this is transferred where? To the income statement. I hope this is clear. So this is for your understanding only I prepared this income statement. Okay, so this disposal profit will be shown in the income statement on the credit side. It's an income. Okay, and you take the income and expenses, you calculate the profit or loss. That's how you have to do. So finally what you do, the final step. So what is the final step? We recorded the sales proceed. Finally
In the disposal.
find out profit or loss from disposal account.
Oh, okay.
And
Record it in the income statement.
yeah, record it in the income statement. Is that clear?
Yes.
Okay, so shall we do a quick question? Can you do it?